even in 2022, which was a bear market, the number of active wallets grew 42%. It's growing incredibly fast. I've said for a long time it was the fastest adoption of any technology the world's ever seen, faster than the internet, faster than the mobile phone, faster than the television. But obviously AI just overtook that. It got to 0 to 100 million in 5 weeks. But still, the pace of adoption is ridiculously big. So even if we extrapolate out the trend, in a year's time, we're at a billion. Maybe the trend slows. Maybe it's 750 million by the end of 2024.
2023 has been a surprisingly good year for Bitcoin. According to CoinGecko data, Bitcoin increased its share of the total cryptocurrency market from 38% to above 50%. In his recent session with John Deaton, seasoned analyst Raoul led an enlightening discussion on the complex ties within the broader crypto market, focusing on widespread Bitcoin adoption and exploring how XRP and Ethereum synchronize with Bitcoin's price changes. Diving into the world of wealth through ETFs isn't a quick fix, it's a calculated journey, a financial waiting game. Wall Street bank Goldman Sachs predicted that the crypto assets ecosystem would see a significant rise in trading volume soon, amid potentially bullish signs like the approval of spot Bitcoin ETF, the Bitcoin halving, and the U.S. Federal Reserve's interest rate cutting measures in 2024. The conversation touches on how assets like XRP and Ethereum were part of the early crypto landscape and were embroiled in survival battles between different crypto communities. In the interview, John Deaton, founder of Crypto Law and a pro-crypto attorney, predicted a crucial July 13th ruling. He foresaw XRP hitting $1 but believed it wouldn't reach new highs until a big Bitcoin-driven bull run. After the verdict declared XRP a non-security, it shot up to 93 cents. However, these gains faded in August as XRP lacked support from Bitcoin and the broader market. Ethereum, one of the world's most prominent digital assets, rose above $2,300. Regarding whether tokens like XRP or ETH will ever detach themselves from the Bitcoin cycle, Powell suggests that the macroeconomic cycle heavily influences all assets, including cryptocurrencies. He anticipates a time when all investments, including cryptocurrencies, will experience a substantial rise, potentially culminating around 2025. Let's focus on the video to explore more. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
The weird thing is somehow that community's got itself tied up in knots where, Bitcoin has a very clear narrative. It's a super secure chain. It's battle tested.
Absolutely.
Everyone knows what it is. That's all you need. But what they've then said is, well, nothing else should have value, which is this kind of intellectual weird place to end up. Right. Because these other things are networks of which people are building entire businesses, use cases, DeFi system, NFTs, all of this stuff, stable coins. That's not happening on Bitcoin. These are different types of use cases for a blockchain. And I just don't see how that kind of weird intellectual knot they get themselves tied up in to say, well, everything else is a scam and it's all worth zero. That's just stupid.
No,
and, it's interesting enough, I'm not a big holder of XRP, but I've always had some, but how much shit that they took because they were around in the early days.
Right.
And, it really was a battle of survival of the chains. And I get it, that one gang versus the other, but, it's kind of ridiculous.
Will tokens like XRP or ETH, will they ever decouple from this sort of Bitcoin cycle that we've witnessed?
No, because the Bitcoin cycle is the macro cycle. Don't forget, all assets are going up and down in this 4-year cycle, as is the economy, as are interest rates. It's all due to 2008 and resetting interest rates back to zero, all the major governments around the world. They then issued their debt in this 3 to 5 year sector. So let's call it 4 years on average. And this debt refinancing cycle is the cycle that drives Bitcoin, all crypto, all assets. It's also the presidential cycle. They're all the same thing right now, right? This is this super correlated world.
Yeah.
So within it, the first part, what I call macro spring, which is what we've been in, the early part of a bull market, when inflation is starting to fall, growth is still falling, but starting to try and stabilize somewhere. normally that's when Bitcoin outperforms. It's like in the beginning of a bond market rally, it's treasuries that outperform. Then as people get confidence and more liquidity comes in the system, they start taking more risk and it goes further out the risk curve. And that's when the alts start performing. So we're transitioning currently from macro crypto spring to macro crypto summer. So that's what's known as alt season. And
Okay.
it starts with the higher quality tokens first. And then at the end of it in 2025, it's kind of everything goes up ridiculously.
Raoul Pal's insights highlight these market dynamics, indicating a potential evolution in the resilience of cryptocurrencies, particularly Bitcoin, during market fluctuations and downturns. According to the World Bank, developing countries paid a record $443.5 billion in 2022 to service their public debt as global interest rates surged. Higher inflation would cause the Reserve Bank to raise its interest rate targets even further, worsening things. Despite the looming recession and potential market volatility, recent developments indicate a robust demand for Bitcoin. The significant capital flow into Bitcoin ETFs reflects a more profound shift in the financial landscape. Raoul Pal observes that despite facing exceptional macroeconomic circumstances marked by significant inflation and unpredictable interest rate shifts, Bitcoin has consistently demonstrated its historical strength and resilience. We've got a few clips from the interview. Let's shift our focus to those.
Governments want to bribe voters, so they give out as many candies as possible, and that's stimulus. The central bank is involved in this because it has to help refinance the government finance debt. So they do want to get interest rates lower. They're talking a harder game now because I think they want inflation to undershoot, because then that gives them the cover to use the balance sheet, to print money, do all of the things that they do. And that's fine. And that would be a normal crypto cycle. We've seen that pretty much every time we get into the halving year.
Right.
But we are seeing some bigger dynamics here, which is we could see a huge amount of capital coming in because of the ETF. And because of a lot of people are building on real world assets. You know, we're seeing money transmission mechanism stuff being done. We're seeing, you know, new use cases of NFTs. They were new for the last cycle. You know, what are we going to use them for? When Solana can mint 1 million NFTs for $100, well, you can use it for ticketing. You can do all sorts of things we can't yet imagine. And we've got the CBDCs are going to be rolled out in some places within this cycle, which is, again, using the underlying chain and the ongoing growth of stable coins. And we're seeing brands come into the space to use kind of Web3 as a way forward for new business models, which is why I call it the everything everywhere all at once, which means that we could have collective madness where kind of more like the 2017 cycle,
Right.
it just goes crazy. Now, even I expected the same kind of finish of the 2021 cycle. I got that spectacularly wrong. But maybe we get it this time around. Its bear market was the same as all the other bear markets. So even though we went through this extraordinary macro situation with this ridiculous inflation and huge, as you said, violent rate rises, Bitcoin went down 76%. It's kind of does that every time, you know? And so I think just what happens is as liquidity comes out of the system, liquidity comes out of cryptocurrencies, as it does out of emerging markets, as it does out of commodities, as it does out of all of these things. When liquidity comes back, it comes back. But each drawdown from every bear market in Bitcoin is less than the last. It's like ETH first time around was 97.5% down.
Wow.
Second time, 80%. Third time, probably 70%. You know, Solana, first cycle down 98.5%. Next cycle, if it does well and thrives,
Right.
it will be 80%.
Right.
And Bitcoin will be less the next time around.
Much of Bitcoin's gains came later in the year as a potential U.S. spot Bitcoin exchange-traded fund and hopes of more accessible monetary policy renewed investor energy. In the crypto arena, Bitcoin remains the king, its price movements dictating the fortunes of lesser coins like XRP. But is this an unbreakable bond? Feel free to share your thoughts in the comment section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.